Australians are abandoning their credit cards in droves, opting instead for new payment options like buy now, pay later. It's seeing credit card companies trying to lure buyers back in with special deals. Let's see if they're worth it with our finance expert Michelle Maynard. Hi Michelle.
Hi Mon.
Like a scorned lover, the banks, they want us back, Michelle, specifically with a credit card in hand. How are they doing this?
They do want us back and they're a little bit upset that we've broken up with them. Our head has been turned by the younger buy now, pay later schemes. Basically, they've come up with a whole bunch of deals to try and get us to sign up to their credit cards. That could be hundreds of thousands of points upon signing, free for the first year, or cashback and vouchers. They really are trying to get us to sign up to credit cards after 2 million of us have cut them up and put them away. But you have to make sure that you read the fine print because these deals aren't always as good as what they look like. For some, 100,000 points will get you around $500 worth of vouchers, but the annual fee on that card is $698, so the numbers really don't stack up. These high reward credit cards also come with high interest, on average around 20%. So while we think the banks might love us and are trying to woo us back, they really do love their bottom line better, and that's what they're aiming to fix.
All right, the younger buy now, pay later schemes aren't that crash hot either. Why are we adopting them so readily?
Because they're easy, Mon. They let us in without all the credit checks that the banks have, and it's because they aren't as highly regulated as our banks are. The younger consumer really does like buy now, pay later because, one, the credit is easy to obtain, but also it doesn't have this perception as bad debt that credit cards really do. So people are signing up to buy now, pay later thinking it's not going to affect their credit rating and that they can stay on top of them because it is 4 easy fortnightly payments. But the data actually shows that people are still getting in trouble with those buy now, pay later schemes because they're not budgeting for them correctly.
So you're saying they do affect the credit score?
Absolutely.
All right, now if we can afford to buy on credit, how best do we go about it?
Look, credit is not bad, and when you use it within your budget, it can work to your advantage. It really depends on what your relationship is with money. So if you're one of those people that pay your balance off every month, one of these higher interest rate credit cards with all of the rewards might be good for you because you get the benefit without copping the interest. But if you can't clear that interest rate balance every month, then maybe something with a lower rate is going to be better for you. Buy now, pay later also has its place. Just make sure that you don't overcommit yourself. So if you have a balance of $1,000, unless you can pay that $1,000 back in 4 easy fortnightly installments, don't max out that credit. Credit definitely does have its place and you can push things down the road without incurring interest, but you need to make sure that you can afford those repayments so you don't cop fees and interest and you don't cop penalties. And don't credit card hop. People like to sign up to these deals and then before the end of the year close it down and move to another one. What people don't realise is that also does affect your credit rating by having too many credit applications. So things we really need to be mindful of is don't pay interest rates that you shouldn't, clear your debt as soon as you can, and there is a place for credit, but make sure you're using it wisely within your budget.
Michelle Maynard, been good to have you with us again. Thank you.
Thanks, Mon.